Let's touch base with Hans Goetti, Head of Investment Asia, joining us from Singapore to give us his perspective on trade this morning. Hans, good to have you on the show. What's the call that you're making as far as the outlook on the U.S. economy is concerned? Because the dollar is gaining strength, inflation is around 2%. There's talk about U.S. recovery not being as strong as anticipated, and then of course the expectation of when the Fed would move on rates.
Well, the U.S. recovery is on the way. It's not a strong recovery, we know that, but it's strong enough to create more than 200,000 jobs for a few months in a row now. What we have to watch in the U.S. is inflation. It's not high in absolute terms, but a year ago we were at 1%, now we're at 2%, and there's a good chance that if the employment situation keeps improving, at some point you may have some labor shortages in certain areas, which may lead to some cost push inflation. And if at the end of the year the labor market has improved, they're below 6% on the unemployment rate and maybe close to 3% on inflation, then the Fed will find itself in a situation where they have to take a decision, and I think that's what the markets will be looking for.
And for the longest time, global markets have been quite resilient. But for the moment, it appears that global markets are in a risk-off mode. What would you attribute the current global market setup to? Simple profit booking, routine correction?
Well, we had risk off for the past few days, but it appears now that maybe we're going in the opposite direction again. A lot of these mood swings are dictated by geopolitical events. If geopolitics looks like it's going to loosen up a little bit, we have a rally. And if you look at the technical picture, let's say on the S&P 500 in the US, you had buy on the dip since 2011. We have not had a 10% corrections in 3 years. And this time around, it looks like, again, we have had a correction to the uptrend line, and we may have a shot at other highs here. So I don't think this rally is over just yet, as long as central banks remain supportive. I think that's the key here.
What's the outlook for Asia then, in lieu of the uncertainty that prevails globally?
Well, the outlook for Asia is mixed. I mean, you have to be selective in which economies you're looking at and which markets. Asia remains, as a region, remains export dependent, and therefore I would think that Taiwan, selectively Korea, are looking good. I would think China is very interesting from a valuation perspective and also from a policy perspective. I think there's a commitment to reforms there. And then, of course, there's India, where we have a dramatic political change that global investors wanted to see. We got it now. The market, of course, has discounted a lot of the good news and is probably now in a consolidation phase that could last for a few months. But it does not deter from or detract from the fact that we see a re-rating in India over the next few years. And we are now probably in India at the stage where the economy is recovering, and we are on the verge of a new investment cycle. So overall, a very positive picture. In the long term, in the medium term, a need for a consolidation.
Hans, we had Paul Schulte of Schulte Research yesterday on the show, and he made an interesting point. According to him, Indian markets currently are trading at a premium to other emerging markets, but according to him, that premium is well justified.
I think it is. You could look at India at 2.5 times book. Yeah, you could say it's expensive, but India has always been a little bit expensive compared to other emerging markets, and I think I would agree. The premium is fully justified. India is one of the few countries which move more towards capitalism as opposed to central planning that you see in many parts of the world, unfortunately. And I think that's it's a breeze of fresh air, if you will. And we think there's every, let's say, reason to assume that there's a re-rating of the Indian market going on.
Hence, for Indian markets, two of the biggest market-moving events for this calendar year, they are behind us. Calendar event number 1 was election outcome. Calendar event number 2 was the election outcome. Both those triggers are behind us. What could be the next big trigger for Indian markets?
Event, but I think we have to see whether the new government is able remove some obstacles to investments. I mean, there are a lot of investment projects stuck somewhere in a bottleneck. If that could be eased, and I think that's the key, that's something that foreign investors want to see, probably Indian investors as well, the resurgence or the resumption of an investment cycle. I think that's the key for India, and that's something we want to see. But this is not a